Peter Schiff, an expert on the economy, he forecast the financial crisis of 2008.
What was it that you saw that others missed?
You were on my show an awful lot. I appreciate it because you were one of the only people that saw this coming and had the cojones to say it.
Nobody sounded the alarm louder than Peter Schiff.
The worst is yet to come. The fundamentals are not sound. They're awful. If the fundamentals were sound, we wouldn't be having these problems. This is going to be an enormous credit crunch. The party is over for the United States. We cannot continue borrowing to live beyond our means.
It is much greater. But if you think about what Dubai has achieved by having the number 11 port in the world, 6 notches above the largest port in the United States, is that the entire population of the United Arab Emirates, so this is not just Dubai, it's Abu Dhabi and all the other Emirates combined, the total population is just 10 million people. Yet those 10 million people have the number 11 port in the world. The United States is 30 times larger than the Emirates. So on a per capita basis, the people living here in the Emirates, particularly in Dubai, dramatically outtrade the people in the United States. And why are the people living here so much more productive than the people living in the United States? Because they have a lot less government regulation and taxation getting in their way. And so the result of that is incredible prosperity. So if you do have a business or you want to start one and you're looking for a place to relocate, I think you should take a look at what's happening here in the DMCC. You know, I relocated my business and my family to Puerto Rico, but I think the Emirates offers a far more attractive package than what's available in Puerto Rico. The problem, though, for Americans is that while people from pretty much every other country in the world can move to Dubai without having to renounce their citizenship and enjoy all of the benefits of zero taxes, Americans cannot take advantage of the same opportunity because of the American citizenship. Even if Americans relocate to Dubai and are free from local personal and corporate income taxes, they still are responsible for paying U.S. income taxes, even though they're not working or living in the United States. That's why, from my perspective, my opportunities were dramatically limited. I couldn't consider Dubai and still keep my U.S. citizenship, so I'm living in Puerto Rico. But Puerto Rico would have a much more vibrant economy with a much higher standard of living for everybody if overall Puerto Ricans enjoyed the same type of economic freedom as the people living here in Dubai. Now, of course, Puerto Rico is a democracy. The Puerto Ricans get to go to the polls and vote for their leaders, something that doesn't happen in Dubai, but therein lies the problem. Because Puerto Rican politicians have to constantly get reelected, the whole system is very corrupt. And you have to fool the voters into voting for you, so you have to do all sorts of foolish things in order to get elected, because voters don't realize how foolish the things they are voting for are. They don't understand how expensive all the stuff is that they get from government. That doesn't happen here in Dubai. Then the leaders don't have to pursue these foolish policies to get reelected. They can do what's right for the people and the local economy instead of just doing what's right for themselves and their political ambitions. But getting back to the United States, the markets are trading for an abbreviated session today on Good Friday, although I am recording my podcast long before they ring the opening bell, so I don't really know what happened on Friday. So I am going to talk a little bit about what happened in the markets as of the close on Wednesday, which is the last day the market traded before the Thanksgiving holiday. Also, we got some more economic news that came out on Wednesday. In particular, we got the weekly jobless claims, which spiked up to 240,000. The expectation was for a smaller increase from 223,000 to 225,000. So maybe this is the beginning of what will turn out to be a major increase in unemployment. This has been long overdue, and I've been expecting this to start, and maybe it already has. We'll see. Also, we got the PMI flash composite index for November Very disappointing if you think the U.S. economy is not in recession. The prior number was 48.2, and the November number dropped all the way down to 46.3. If you break it out into its components, manufacturing was supposed to decline slightly from 50.4 to 50. Instead, it tanked all the way down to 47.6. That's below even the lowest estimate in the range, which went from a low of 49.5 to a high of 50.4. The same disappointing news in the service sector, which was already weak in the prior month. It was at 47.8. It was supposed to slightly improve to 48. Instead, it went in the other direction, falling all the way down to 46.1. Again, that is below the low end of the consensus range, which went from a low of 47.3 to a high of 49.3. So again, these numbers are indicative of not just an economy headed for recession, an economy that already is in recession. But I think the biggest market moving news of the day and of the week was the release of the Federal Open Market Committee minutes, and those minutes were received by the markets as being dovish. Now, what is the difference between dovish minutes and hawkish minutes? Well, from the perspective of the market, whenever Federal Open Market Committee participants talk about raising rates less, raising them in smaller increments, or maybe not raising them as much in the future, it's perceived as being dovish. After all, they're adopting language that implies that something will be easier in the future than it is right now. So whenever the Fed talks about how they have to raise rates more, how they have to raise them quicker, or how they have to raise them higher, well, that is hawkish. And what the stock market is looking for is any signs of dovishness, even if they already expect those signs. Just confirmation is what the markets react to. Maybe a lot of it is program trading and algorithms where they're looking for these key words, and the minute they think, oh, rates are going to rise a little bit less than we thought, because many people on the Federal Open Market Committee were talking about the need to slow down and to reassess, and that maybe we can't keep hiking interest rates by 75 basis points at a clip. Maybe we should move a little slower and give the markets a little more time to react to the hikes that we've already put in place, acknowledging the fact that there's a lag. So whenever the markets get that type of rhetoric from the Fed, the traders seize on it. And that's why you had the rally in the stock market. But more important than the reaction in the stock market is the reaction in the current